My name is David Swanson, and I'm a principal on Unigestion's private equity secondary team, and I'm the head of secondaries for North America.
How big is Unigestion's private equity team?
So our team is 45 investment professionals, and that is across the globe. We have offices in Zurich, Geneva, London, New York, where I'm based, and also in Singapore, and about 9 dedicated professionals on secondaries. Within the private equity universe, we have over 500 general partner relationships, and these relationships are instrumental in sourcing proprietary deal flow for our secondaries platform.
What part of the market do you focus on?
We focus on the smaller end of the secondary market in transactions with a high degree of specialization and a high degree of complexity. We're looking for assets where we can tailor the terms, where we can have a voice on asset selection and really structure the deal in an optimal manner. And that's both in terms of quality of the assets, quality of the GP, and also on alignment between us as the LP and with the GP.
What distinguishes the smaller end from the larger end of the market?
Between the smaller end of the market and the larger end of the market, one big one is that deals are typically sourced outside of auction. So here we can use our proprietary network and our GP relationships to source transactions. You also tend to have a LP base that's a little bit different. It's a little bit less institutionalized. It's a little bit smaller, and that can lead to faster, more efficient processes. And you also can have LP bases that tend to be a little bit more liquidity focused rather than price focused.
Has the market picked up since the initial crisis?
Yeah, so if you go back to March of this year, the entire secondary market ground to a halt. And for the next few months, GPs and LPs alike really spent time going through their existing portfolio, really trying to understand their exposure and shoring up assets where necessary. And that applied to us as well. We spent a lot of time on our existing portfolio, and we did make some opportunistic investments. Now, if you fast forward to today, the market opened back up really around September. And if you would have asked me back in August or even before that how our year would have looked, I would have said it would have been a down year in terms of deployment. But now, looking towards the end of the year, it appears it's going to be a record year in terms of deployment. And a big part of that is the comeback of GP-led deals.
What is driving GP-led deals?
And the GP market, what we're seeing is still a large influx of deal flow. And really that's driven by a lack of liquidity so far in 2020. GPs have not been able to exit according to their original timeframes pre-COVID. So any transaction that was slated for exit in 2020 has now been pushed out to 2021, 2022, or even beyond that. So to still generate liquidity for their LPs, GPs are coming to market looking for a GP-led solution, and that's how we've been able to transact. And we're seeing a substantial number of deals that fit into that category.
What makes GP-led transactions attractive?
Yeah, there's a number of reasons why GP-leds are an attractive deal type, but I'll touch on 2 of them. One is alignment, and in these transactions, the GP can truly be aligned with you, both through an economic commitment to the transaction and also non-economically. Oftentimes, these deals are a critical part of the GP's future, and thus they're highly motivated to maximize the outcome. And then the second point here is on due diligence. Within a GP-led deal, you really get to do a deeper dive on the underlying assets. You get to meet with management teams, and you get access to much greater financial data, and that allows you to really form conviction. And that's very important, especially in the COVID environment, when you're looking for assets that truly are resilient and can not just survive, but even thrive in this environment. You want to be able to do that deep dive and form that conviction.
What is Unigestion's experience in GP-led deals?
So we've been doing GP-led deals for a long time in that part of the market. Now keep in mind, the first GP-led deal wasn't done until the 2012-2013 timeframe. And we fully embraced that as a deal type really in 2014. So we were one of the earlier adopters when it comes to GP-led deals. And now we have a reputation as being a player that's well experienced in this deal type.
Do you use leverage?
We use a capital call line to manage cash flows, but other than that, we are an unlevered player. We felt that we don't want to take that additional risk, especially in times like these when we're heading into choppier markets. On top of that, oftentimes levered funds don't deploy 100% of their LP's capital, and we always look to deploy 100% of our LP's capital. And then the liquidity profile tends to be a little bit better because cash flows that do come back go right to LPs rather than to pay down debt.
What can we expect from Unigestion's secondary strategy?
Ultimately, at the end of the day, what you'll get in the final product is a well-diversified portfolio of private companies, predominantly in the middle market space, predominantly buyouts, that have been well diligenced and that have been negotiated at a price that is typically a below market price.